Malaysia has recorded its slowest economic growth since the global financial crisis in 2009. GDP for the final quarter of last year came in at 3.6% due to a supply shock in the commodities sector. Now, the central bank governor hasn't given a projection for this year as the impact of COVID-19 isn't yet clear. Let's go with more.
Now, it's the lowest quarterly growth since the third quarter of 2009. Malaysia's economy grew at 3.6% in the last 3 months of 2019, supported mainly by private consumption. Now, prolonged drought has affected palm oil production, while export in electrical and electronics sector dipped in the last quarter. Now, with the coronavirus outbreak showing no sign of tapering, Bank Negara Governor Nor Shamsiah cautioned that the first quarter economic growth is going to be adversely affected, with some sectors such as tourism and the services sector worse hit than others. But it's too early to tell, she said, whether full-year growth target of 4.8% is going to be revised. She will only be releasing the figure when Bank Negara presents the annual report on March 25th.
I wish I have a crystal ball to say that, this is when the worst of the virus will be, and when, it will continue, it will recede. But it's unfortunately, this is something that is still evolving, and it's very hard to predict at this current juncture. We have SARS, we have, the Ebola, and we have the MERS. So we do have this kind of experiences when it comes to pandemic. What we have seen in the past is there could be a dip in growth, but there will be a sharp rebound thereafter.
Now, although the government is on fiscal consolidation path to achieve 3.2% budget deficit in year 2020, the governor says there's still fiscal space to support the economic stimulus package which the Malaysian government is unveiling by March in order to cushion the impact of the coronavirus on the economy. Now, meanwhile, on the monetary policy front, she said while the current rate is supportive of growth, there's still room to lower interest rate further to boost the economy. Given that inflation, she said, is still record low at 1.4%. Now, the central bank last cut interest rate in January this year by 25 basis points to 2.75%. Melissa Go, CNA, Kuala Lumpur.
Cliff Tan from MUFG Bank says Malaysia's economy was weakening even before the virus outbreak began.
The fourth quarter miss was a really big miss. I mean, markets were expecting 4.2, and we ended up with 3.6. So what that says is that Malaysia was already weakening even as we went into the coronavirus scare and the crisis that we have now. So unfortunately, private spending is not that strong. Public spending was, public consumption was down. You've got kind of dubious effects of the phase 1 trade agreement in terms of whether it's actually going to stimulate exports this year. So I'm afraid that there wasn't a lot of good news in today's report. Obviously, with this miss, I think people are going to be ratcheting down their growth forecasts, by about 0.5 percentage point. Now, we have sort of posited that the coronavirus, that our initial working assumption was that for Southeast Asian countries, we might lose about a 0.25 percentage point of growth. So the downward revision is not only about the coronavirus, it's about those other factors that we have already discussed. So you put 2 and 2 together, and this is what you end up, maybe about a 0.5 point off previous estimates.